Apple's only like $7-8 away from its all-time high. Are those types of stocks going to be especially vulnerable as well? Or are they going to be the defensive ports in the storm that they've been in large cases?
My guess is the latter, and I think old habits die hard, and I think a lot of people have looked at those stocks as though they're the treasury bonds of the stock market. As ludicrous as that might sound to you, treasury bonds currently feature negative real returns for investors. And so people have said, okay, I can accept 15% of volatility in Apple in exchange for the dividend plus buyback being a positive real yield in terms of shareholder return. So that's the way people have thought about stocks like that. The problem is there aren't that many of them. The other problem is if we do get a much bigger drawdown just across the board, which, by the way, the S&P looks fine to me, okay? But if what's going on in the NASDAQ started to infect the S&P 500 and this value rally fell apart, which, by the way, could happen at the drop of a hat. Don't get too excited about automobile stocks if people start screaming about recessions. But if that were to happen, I feel like these stocks would hold up better than most, but I also feel like they would be used as a source of cash for more opportunistic traders who are saying, all right, Apple's down 6-7% from its high. That's not that exciting to me. I want to redeploy some of that into a stock that's been cut in half that conceivably could double if the market recovers. So it's tough to say in that tug of war which side would win out. And I guess my bigger point then would be you have to decide whether or not down stocks are good for you. My opinion, and I've been saying this for 11 years now on the air, is that most of the people watching this should be excited about lower prices, not higher prices, because we're all forced buyers in our retirement accounts. Mm-hmm. So when I'm talking about the NASDAQ breaking its 200-day, I'm not selling newsletters. I actually would be fine with that because I'll be a buyer, and I would rather buy lower than higher. I think most people need to reorient their thinking around this. If you're rooting for another plus 30% year in the market, I don't really understand what your story is. Are you retired currently? Because if you're not, you probably would prefer to have a flat or a down year. Again, we're not there yet. I'm getting a little bit ahead of myself. Yeah. But that's how I'm thinking about markets right now.